Hey everybody, it's Jason from MAPsignals. Listen, markets are nuts, so it's a great time to go deal diving for oversold stocks. We have a best oversold stocks to buy now video coming up in just a couple of days. I thought now, though, would be a great opportunity to show you how to actually pick them for yourself. We're going to do it together. I'm going to walk you through it. Let's just get right to how to pick the best oversold stocks for yourself. So the first thing I do is head over to MAPsignals.com. It defaults to the big money index, which you can see right here. It's been Chop City for a long time. We're not going to find much in there about oversold stocks. So I'm going to head over to the sector analysis module. Why? Because this is going to show us all the stocks bought and sold since the beginning of the year. And right away, I want you to see there's more selling than buying in certain sectors. Okay, discretionary here, you got 992, you got healthcare, you got 870 versus 271, and tech is the big mama, 1368 versus 144. If you really just want to quickly visualize it, head down here to the charts. The top is the buying. Energy and financials have been bought like crazy, materials too. We're not going to find any oversold stocks there. Those are probably overbought. But lo and behold, look, tech, big, 22, almost 23% of all sales were tech, discretionary 16.5%, and healthcare 14.5%. So that's probably where we're going to find our stocks. And speaking of stocks, for you data junkies, if you really wanted to go into it, you could literally look at each stock that is bought and sold since the beginning of the year. Take a moment to flow in through here, but look, every single day you got the buying and selling activity. If you really wanted to get into it, you can see what's bought, you can see what's sold, you can see the scores. There are literally 9,269 stocks. I'm not going to do that now. If you want to, have at it. So now we know what sectors we probably want to focus on, because tech, health, and discretionary were deeply sold compared to all the other sectors. So now let's get to the individual stocks. I'm going to head over to the portfolio creator module. Let's do it. So we're back in the portal. I'm going to head over here to the portfolio creator module. Now, this is cool. This shows us all the top 20 stocks over a certain time period, the most frequently occurring. That's how we find outlier stocks, okay? If they keep getting bought and keep appearing in this report many, many times, they have a much higher likelihood of outperformance over the long run. So what I'm going to do is I'm going to go over here. I'm going to put in March 1st of 2021, and I want to take the 6-month time period from March to September. I'm going to put in as many stocks as we can get, 60, and I only want to see the buys. I'm going to hit submit. Right away, you're going to see the SPY in the dark blue here, and in a moment, the electric blue is going to be the portfolio of stocks that this selected, and you will see I did this intentionally because I wanted to pick the stocks that got deeply oversold and underperformed. A lot of tech stocks, health, and discretionary. You want to see what those stocks are, they're right down here. So again, this was nicely outperforming by almost double until November of 2021. And, you know, that kind of peaked things right at the 15th, and then everything sort of started to fall apart. And then we got deep underperformance here. That's where we're going to find our oversold stocks. Don't be alarmed because it's negative. The stocks are right here. Here are all of the stocks, the most frequently occurring top 20 stocks in that time period, March 1st to September 1st. Here they are. InMode appeared 11 times. I own that one, just so you know. NVIDIA, I could go through all of these. But what I really want to focus on is finding these stocks through their performance. So let's look below. You can see the 6-month return. Some of these were just ugly. InMode, Rowe Price, Facebook. I mean, you can already start to see how we're going to get to these. So let me just go through a couple of these in our map view module and see which ones might be the best oversold stocks. So remember, those 60 stocks are the potential outliers. Those are the most frequently occurring top 20 stocks bought by big money with the highest quality over that time period of 6 months. So if they appeared many times, they're likely outliers. But because the market rotated and things got ugly, many of them got punished. So I'm going to just move over here. I took all those stocks, I dumped them into a spreadsheet, and I filtered out the 6-month performance of anything that was down 25% or more. And now we are going to get a list narrowed down from thousands and thousands of stocks, looking at the best of the best in the right sectors, the ones that are deeply oversold, and these are they. So now what we're going to do is go one by one, looking in those sectors that we saw before and see how we can pick the best oversold stocks to buy now. Now we're back in the portal. I head over to my map view module. This is what lets us map each individual stock. Out of the 6,500 stocks, you can pick any ticker. But now we have a list of potentially best oversold stocks. We start with InMode. Full disclosure, I own this stock. It's a healthcare company, healthcare equipment. You get all your relevant information up here. This is the important stuff. You got a MAP score of 63.8. That is because it's technically weak. It's been pounded down. Fundamentally, I mean, it's almost 100%. I've never even seen that. It's crazy. So we'll see why. This tells you what the stock does. InMode develops, manufactures, market devices, harnessing novel radio frequency. Okay, we get it. Here you can see the big money signals. Nobody's been buying it the past 30 days. Nobody's been buying it the past 90 days. But is it an outlier? Yes, it is. Why? It has appeared 20 times on the top 20 reports since July of 2014. Here you can see the big money buying and selling. We can blow that out over the course of a couple of years. So you can see there was a lot of buying, recent selling. This has been a top 20 monster for a long time. You see that here. Okay, let's get into what I like and what I don't like. I love big sales growth 1 year. I love big sales growth over 3 years. The 2-year versus 1-year EPS growth of 14.5% is great. 3-year EPS growth of 100% is great. The stock makes a 46% profit margin and it has virtually no debt. It's got a low PE right now and it's a small cap. So if we buy that now for potentially years to come with a long-term horizon, I think we're getting a good deal. Why? Because it's down 43% year to date. Hey, Warren Buffett said, just check out the stock market every now and then and find stocks that are trading at prices that don't make sense. That's the way he does it. We're not necessarily Warren Buffett, but I like that frame of mind. And here you get all sorts of different stats in here. What's held by insiders, institutional ownership. We like stocks that are held by insiders. We like people who eat their own cooking. You can see technically it's very poor. It's just getting a drubbing. Fundamentally, it's awesome. This is a great potential oversold stock. Next up on that list is Rowe Price, TROW. Now that you know what the map view module does, we're going to sort of skip ahead and speed it up. Technically, it's very weak, 29. Fundamentally, really nice, 79. Here's what they do. They're an investment management services company. Listen, ordinarily, I don't like financials because they tend to borrow a lot of money and be levered to interest rates. This one is not an outlier. But it is maturing. I mean, it's been on there a few times. It's got a lot of big money buy signals. And let's, just explode that out. We can see what the chart looks like. A monster. Let's look at the top 20 appearances. A monster. This is already looking good. 1-year sales growth, great. 3-year sales growth, good. 2-year versus 1-year EPS growth, decent. 3-year EPS growth, very good. Profit margin, 39%. That's awesome. Hey, this stock does have low debt. I like low debt because if rates go up and people need to refinance their businesses, it's going to hurt. Again, technically weak. But this thing has been a top 20 monster. The first time it appeared was December 16, 1996 in our backtest, and it is up 2,600% since. All right, the next one on the list is FB. Used to be called Facebook. Now it's called Meta Platforms. You know what they do. I know what they do. Technical 29, fundamental 83. This is a very strong stock. We don't need to go over what they do. Is it an outlier? Darn right. It's appeared 69 times since July of 2014 on our top 20 report. It is a bona fide outlier. This thing has been beaten to a pulp. Look at this, falling from, say, 382 to a low of 186. I mean, it's just ugly. People are throwing the baby out with the bathwater. Let's look at the fundamentals. 1 year sales growth 37, 2 year sales growth 28, 2 year versus 1 year EPS 17, excellent. 3 year EPS growth of 26, solid. Profit margin of 33%, and it only has an 11% debt to equity ratio. We like that. Okay, it's a huge market cap. It's been kind of cut in half. The bigger the market cap, typically the less the risk. It's going to keep on chugging, most likely. If you believe in Facebook and the direction they're going, metaverse and all that, awesome. Technicals, very poor. It's been performing miserably. It is down 37% year to date. It might be an oversold stock. Okay, let's look at some additional stats. We got strong institutional ownership. That's great. It's up 433% since the first time it ever appeared, August 27th of 2013. And now for a stock that has stuff that I don't like, even though it appeared on the top 20 report. Remember, that's a computer-generated process, MRVI, Maravai LifeSciences Holdings. It is a healthcare company. Look at this chart here. It has been Chop City, and it has been that way for a while. This is a newer issue, just came out last year. Been a top 20 a couple of times, but let's look under the hood. 2 year versus 1 year EPS growth negative. That's not ideal. I don't like companies with oodles of debt, because if they got to refinance and higher rates, it's going to be harder to do. It's a smaller market cap, so that usually means a little bit more risk. Technically it is beaten up. It's only down 8% year to date, so it's not as oversold as some of those other potential gems. And since it's appeared on our top 20, it is down 8%. So this is one because it's a newer comer, it's a newer issue, and it doesn't have the fundamentals as strong as the other stocks. I would probably avoid this one. Hey, there you have it. That is how we pick the best oversold stocks. That's how I do it. I hope you enjoyed learning a little bit about how I see the market and how we pick these stocks through data. Listen, if you like what you see, please like and subscribe. By all means, leave a comment, leave a question. Tell me what you liked, what you didn't like, and we'll try and address it next time. But hey, until I see you next time, remember, don't let the markets get you down. Look for opportunity. Today I showed you how to do it on your own. I will see you next time. Thanks for watching.